Hello, hello. So Alibaba is expected to report earnings before the bell tomorrow, and I thought I should make a video just to discuss a few things about what could potentially happen with Alibaba when the earnings are out tomorrow. So we will see here in this article, which is very, very interesting and kind of discusses some potential levels and some analyst estimates here. So Alibaba has actually lost about 54%, as you can see here. And the article also points that respectively has declined 44, 37, and 27% over 9, 6, and 3 months. So basically seems to be losing its value as months progress and losing more and more. It hasn't actually rebounded yet. However, it has lost a lot of its value mainly due to some regulatory pressures from China, and we want to see what's going to be happening this quarter. And I wouldn't be surprised if Alibaba actually falls more. It's typical for downtrends that the slightest miss could still bring Alibaba down even more, so that we can have even better entry points later in the future. So I just wouldn't be surprised if that happens at all. And I wouldn't be concerned either, to tell you the truth. So, what we're seeing here, one of the articles that we have spoken about some time ago in this channel, is SoftBank, when Alibaba actually issued about a billion ADRs. People thought that Alibaba is actually diluting investors. That wasn't the case. They were just issuing US stock, replacing some of their Chinese stock with US counterparts in order to be able to sell in the US. So some analysts actually thought that SoftBank could potentially sell their stake, which is about 24%, is massive. But SoftBank themselves came out and said that they're not planning to do that. Now, as you can see here, a security analyst, James Lee, has cut his price target on Alibaba from 2015 to 180, which is still much, much higher than what the current stock price is, sitting at about $121 right now. The article points to 123 the time it was written. And so this is 40% of upside, even at the current levels. And obviously there are other analysts like Berkeley's Zhong Shao, who actually listed Alibaba as a top pick here and says that the company is too important to be ignored, and I actually agree with that. He sets up a price target of 206.75 per share, which is about 125% of the current price level. And I think that's fair. That's what I would expect from Alibaba in a year or two, frankly speaking, myself. Now, you will see here that in the 3 months that ended December, Wall Street expects the Hong Kong-based online retailer Alibaba to earn 2.54 per share, dollars per share on a revenue of 38.68. These are the expectations. And you'll notice that they are much, much lower in terms of the earnings per share over here than what they were like a year ago, the actual similar quarter, really. It's much, much lower. So expectations are lower, and that's generally speaking a good thing. And also the expectations of revenue are actually higher here. So they are expecting to increase revenue, but actually decrease earnings per share. And so we can have potentially a bit here, and that could cause some extra buying here. Now, for the full year, you will see that the earnings are projected to decline year over year for the quarter. That is, the article meant to say quarter here, the author. But for the full year revenue, they expect an increase of 21.9%, which is pretty massive actually. That's a lot if you think that if you actually account the fact that we're talking about a behemoth already, Alibaba. And the article actually points some streams of revenue here for Alibaba and some economic downturns that came from China's crackdown on anti-monopoly, cybersecurity oversight, and some antitrust practices. And there's some regulatory risks that you can understand, and we have again talked about previously. And An interesting thing to also remember is the fact that Alibaba had to pay more taxes right now. You see that this extra regulatory push cost Alibaba about $3 billion, and that's combined with some new taxes and fines for Alibaba. So that put a little bit of pressure, but looks like Alibaba is actually dealing with that. And although there is still some risk, they seem to have lifted a lot of the pressure really already. And the article basically closes by saying that Q2 revenue of $31 billion fell short of expectations by 670 million, and adjusted EPS was also something that disappointed investors, missing by 19 cents. And so what investors would expect to see on Tuesday is growth acceleration, and I think that's a very, very important point here. Guidance may be super important for this particular earnings report, plus the guidance in terms of growth, how the company is going to be growing, because that can be reassurance for investors that company will actually surpass all the issues that they had, the headwinds, and come back to actually doing well. And although they are already doing well, but it's all about the sentiment. It has to shift, and some strong guidance could actually really help with that. And just to end the article, I wanted to also point out to this CNN Business stock price forecast here from 50 analysts who are offering 12-month price forecasts for Alibaba. And you will see that no estimate really out of this 50 is below $140 here. You see that there's a high of about 295 and a low of 139, which are significantly lower than the current stock price. And even the lowest value is significantly lower than what we're currently looking at for Alibaba. So that's something to bear in mind as well. These are the expectations for the next 12 months, and I kind of agree, and I think I would point to a little bit of a higher, not even the median price here. I really believe that bearing some sort of weird happening in the stock market, some sort of crash or something of that sort, in a normal outcome, I would expect Alibaba to reach 200 myself, or potentially or even surpass that even this year. Again, if something not out of the ordinary happens really, bearing some extraordinary event in the stock market, I think Alibaba is supposed to increase its stock price, hopefully by a lot. And this specific quarter and the next one are super important, and will actually give us a lot more information about what's going to be happening with Alibaba. So hopefully that gave you some information about Alibaba and what's going to be happening in the next quarter. And let me know what you're thinking about the stock. Are you actually thinking of entering Alibaba after earnings? That could be an interesting time, especially if the stock moves, I'd say lower. Like if the stock moves lower, I think it's an especially interesting time to buy even more. But even if it moves up a little bit, I think it's still an interesting opportunity to buy, just because the stock is already at very low levels compared to how much money they're making. So hope you enjoyed the video. If you did like it, please leave a like on the video, because that really helps a lot. And subscribe, because there's going to be a lot more content. And you can also join our Discord channel, in which a lot of investors, we talk about investing. And also you can find the news, you can discover the news about the new software that I'm creating. And I'm gonna be giving away some information very soon. And potentially giving also access to people for testing and purposes of that sort. So thank you for watching this one, and hope you are gonna be having an awesome day tomorrow, and also that you had a nice day today, I guess. So I guess again, thank you for watching, and I'll see you in the next video. Bye bye.